Hello, hello. So I'm going to attempt something I haven't done yet, which is to go live on Instagram and as well as YouTube at the same time. And want to welcome you as I want to talk about some of the deals that have come across my desk this week and three topics. First one is going to be down payment assistance. Other one is going to be those who've purchased. One of them actually was 5 years ago and have plenty of equity to now put it as a down payment. And the third one is if you're self-employed and you're wondering if you can purchase, do you have to increase your taxes now to be able to qualify because maybe you didn't report enough the previous years. So those are the three topics. But I also want to let you know that I will be hosting um, guest speaker as well as hosting webinar March 5th at so DM me to get the detail because it's different time zones. And then on March was my calendar, March 12th. So 5th, 12th, 26th, and 27th. 27th is going to be for investors. So just DM me if you like to have the link for those events. But again, just wanted to come live and share with you that there are solutions, there are ways of purchasing right now. I have a client and I did a video on this and shared, and I realized after the fact that guess what? It was not visible to see the details of the Georgia Dream Down Payment Assistance. So this is a program that is in the state of Georgia. Throughout the states that somebody can actually use 10,000, 12,500 down payment assistance to purchase a home. This gentleman is buying for him and his wife. The price is 270,000. He's putting 1% earnest money, which is 2,700. A lot of people are having to put $20,000 down with the down payment assistance plus seller concessions because homes are staying on the market longer right now. Then you can negotiate better to get the seller to pay for your closing cost. So that's one program I want to share that is through the state of Georgia. Now, I'm licensed in Georgia and Florida, so therefore also in Florida, there are some down payment assistance options. Some of those programs, they ran out of funds, but there is a program that we do have here. My company is FHA, a first and a second mortgage. Remember, you're not getting anything really free, so there is a cost. That might be in the interest rate, that might be repaying the debt, but that might be a solution to actually getting you into your home. I bought my first house, I think I was 24. That was a stepping stone for me to buy that first home. So think about your first home as a stepping stone. Think about investing as different steps, right? You put money here, you start investing. So don't look at it, I want to buy my new house. I'm going from renting to this magical, beautiful home that is perfect. You may have to do it as stepping stones if you're not all there with your funds, with your credit, or with your income. So I want to encourage you to be in conversation with a lender like myself who like to empower you for what do I need to do to be able to qualify. A lot of times people get afraid of being told, no, I can't qualify or I won't qualify. So therefore, I'm just going to step back and not do anything. Don't freeze. Now is the time to take action to see what do I need to work on for my credit. I'll help you with a credit simulation if necessary. How much money do I need to have? So this gentleman, Ed, he actually was looking at homes. He was interested. He wanted to make offers, but he wasn't ready because he didn't have the tool to know which program I can qualify for. What do I need to make sure the seller does? Which in his case, the seller gave him $10,000. Is that going to be every day? Probably not. But right now is a great time to look because rates are still good. Not necessarily the best from what people want to look at it as far as in the fours, but rates are in the sixes right now, right? Sixes, sevens, depending on your situation. There are some great offers being out there of lower interest rate to buy the rate down. So there are ways to structure the deal, but you got to open your mind, open your horizon. Now, beyond the down payment assistance, I also want to talk about clients who've actually purchased. There's one who called me yesterday. Thank you, Joel, for the referral. So clients who've purchased their homes about 5 years ago or sometimes even longer, and they've accumulated this equity and they are wanting to make a move. So this young lady, she's like, the house is too old, needs a lot of repairs. I'm by myself and I feel like it's just over my head after 5 years. I want to go ahead and sell it. But she's going to most likely net about $120,000 to now buy the next home. Yes, she probably has a great interest rate from before, but she's not stuck on my rate. I don't want to let it go, because you are letting equity sit there and not moving into your next step. Remember, stepping stones. So I want to encourage you to go beyond what the interest rate is right now. Yes, you want the interest rate has an impact on your payment, but also you have equity. Does this mean you can now take that money, do a line of credit to buy an investment property, take that money and sell the house and buy a home where you wanted a better school district for your kids, whatever that conversation is. But I also want to share that I have one client who said, I don't want to go through the process of selling my house through the traditional ways and waiting for my house to be sold. So she's using one of our bridge loan program where they are actually buying the house from her. It's not on her credit. So now it's currently on the credit because I did a pre-qualification, but she's going to go through their process, close with them. They're buying the house from her, and they will give her some money to be able to purchase the next house. So this is helping her move forward without putting her house in the market and waiting and see, is my house going to sell or not, or how long will it take? So there are some programs out there as well. If you currently own a house and you are not sure if you want to, how you can sell it or put on the market, or if you get approached by investors but you don't really want to go that route, this is not a program that I offer directly. It's a referral, but I can make that connection and bridge so you can have answers. So again, be in conversation about the equity of your home with a lender who you can trust in. What can I do? What are my options? Again, starts with a conversation, planting seeds, and then take steps. So that's the second topic that I wanted to cover, which is basically your equity. And I want to say thank you, Jefferson, to be online on Instagram. Monique sounds, and just kind of do some wave as I'm getting myself back into doing some lives by myself and then inviting some guest speakers. So the other topic that I wanted to go ahead and share is self-employed. So we are in the season of filing taxes, and if you're self-employed, meaning you are 1099 as a contractor, you report as self-employed on Schedule C, or you are self-employed and you do I don't want to go into detail as far as how you corporations, K1s and all those, but bottom line, you write a lot of expenses, so you don't pay the IRS. So therefore, qualification gets to be challenging because your net income is not really showing up income to qualify. So self-employed buyers right now, I invite you before you file your taxes, let's see what you're reporting in 2023 and what you're going to be reporting in 24. Let's do the average. There are options at times, depending on how much you're putting down, where we may just need 1 year of your taxes. So let's be in conversation based on your debt, how to structure your loan as a self-employed buyer, and either use the traditional route, which is going to be with your tax returns if you've been reporting sufficiently, but make sure you're in line. Or if that's not working for you, then go ahead and use one of our bank statement program or 1099 program. So we'll take 12 months of your bank statements. Usually prefer business statements, but we have options of personal. And we'll average your income of how much you've been depositing over 12 months with percentage of that income and do what's called your debt to income ratio. From that amount, we'll see how much you qualify. Yes, the rates are higher. Yes, you need more money. But keep in mind, you are now still going to keep your taxes the way you've been reporting it, maybe with a loss or not as much, so you don't pay the IRS. So you get to choose. Do I go ahead and owe the IRS or pay the IRS a lot more money to qualify for my house? Or do I use some of those traditionals? I'm not here to judge which way you go or not. I'm just sharing information that's available to you to decide which route is best for me. So usually those programs will require about 10% down, depending on your credit score, and interest rate will be higher than traditional loans, but they're still very favorable when you think about how much you're actually saving from not having to get a payment plan with the IRS. So if you are, again, 1099, or you get paid cash and you report on a Schedule C, or you have an LLC, and that's how you make your money, and it's all reported with a K1. All of those traditional tax returns, we're not looking at tax returns. We're just going to look at your bank statement, or I'm doing one right now that's a profit and loss. So we're looking at what the accountant has stated that the buyer is making and qualifying that way. Now, that particular program, he is putting about 20% down, but there are layers to it because, by the way, there's a way for people who have a tax ID number, an IT number, to still purchase. So there are options out there. Be in conversation with lenders who have different or an array or really a rainbow of loans that can fit your needs. And if you can't do it right now, I like to be in conversation with you now to tell you and guide you what do you need to do to be ready. So again, it's still a great time to purchase, as long as it makes sense with your budget, with what you're currently paying versus what you're looking to pay. I have to say that right now clients are basically coming like the one yesterday. Well, I'm paying right now 900 because of how much I bought my house and now she has so much equity. I don't really want to pay more than $1,800. Okay, that's still feasible, but she's having to make adjustments of not the $400,000 home, but maybe more of the 300. Or okay, well, I thought I was going to just do 1,800. Now I'm going to go ahead and do over $2,000 because that's the type of home I'm looking for. So that's why it's so important to be in a conversation right now of what can you do with where you are, and have those estimates, have those numbers, have clarity. And that's what I come into the picture, because I love to bring clarity. I love to educate home buyers, which is why, like I said, I have 4 webinars for March 5th, 12th, 26th, and 27th, where we'll go into those conversations. And of course, book a time with me. Let's be in direct conversation of what you're dealing with. How can I be of support? Those are the 3 things I wanted to share. Down payment or 100% financing, using the equity in your home, using a bridge loan, or selling your property and now have a large down payment, and self-employed. So stay tuned for more information. DM me if you would like to either receive my home buyer guide, as well as which date you would like to join me for a webinar. Thank you so much. Now the keys ending.